reversal of past impairment. A reversal of cash generating unit allocated to the asset of the cash generating unit except for the goodwill pro rata with the carrying amount of these assets. This is the first important thing. Ignore 4.22. Shift to the 4.23. The reversal is recognized in the income statement except when reversing a loss recognized carrying amount or revalued amount, which are treated in accordance with the applicable IFRS. This point, another important thing, goodwill once recognized, impairment loss or goodwill are not reversed. Candidate, one very important point we need to consider if we have done with respect to the reversal, very important thing we need to consider, very important thing. Impairment of non-current asset with revaluation reserve. Whenever we book the impairment loss, we have to consider in accounting that we have any revaluation reserve of that particular revaluation of that particular asset. Do we have any revaluation reserve? If we have revaluation reserve, so we have to compensate the loss of that asset impairment with the revaluation reserve. Rest of the remaining part, that should be profit and loss account. And subsequently, the impairment become reverse. So for accounting purpose, two important things need to consider here. Number one, the most important thing, impairment is reversed maximum to the extent that the asset had not impaired before. Impairment reversal is only possible to the extent that the asset had not impaired before. And number two, the sequence of impairment is same as the sequence of the reversal of impairment is same as the impairment put up. For example, if we allocate the impairment with respect to the revaluation and the income statement, then we have to reverse with that situation first with the revaluation, then remaining part of the reversal related to the income statement. And that is what mentioned. However, the carrying amount of the asset is not increased above the lower of its recoverable amount if determinable, and if its depreciate carrying amount had no impairment loss originally been recognized. Any amount left unallocated are allocated to the other assets except the goodwill. This is what this one is pure about the F7 aspect for individual assets and as well as about the cash generating unit. Let's take an example. For example, that is the year 2017. A building with a cost of 500,000. This building was purchased at 1st January 2015. Are standing at are reporting at 31st December 2017. Depreciation straight line. Depreciation at straight line. Revalued amount at 31st December 2017, that is 400,000. That is 400,000. Okay. So work out with respect to the 2017. So we will work out like this. Building cost 500,000. Depreciation for 3 years on a straight line basis. 500 divided by. Okay. One more thing. That is life 10 years. So 500 divided by 10 into 3 years, that is 15, 16 and 17. 3 years depreciation. That is 1,50,000. So book value 3,50,000. 3,50,000. And the revalued amount that is 400,000. So that means revaluation reserve $50,000. It's very simple. And another thing is that no impairment indication. This is all about 2017. Huh? There is no impairment indication. Number one, there is no impairment indication. First, and number two, the company has a policy that do not transfer any excessive depreciation from revaluation to retained earning. Do not transfer any excessive depreciation from revaluation to retained earning. This is a part of IAS 16. Yes. So if we work out with respect to this, so extract, if we work out for the extract, so income statement, that is depreciation expense for the current year, that is 50,000, and a statement of financial position in the non-current asset with respect to property plant equipment, the amount reflecting to the 400,000. And in equity, the revaluation reserve that belongs to 50,000. Okay, it's very simple. I'm going to change a little bit here for the simplified of the calculation, for the simplicity of the calculation. That is 4,20,000, and this is 70,000. For the simplicity of maths only, I've changed this values. 4,20,000. Depreciation expense 50,000. Okay, that's we have done. Now 2018. Now 2018. You know that depreciation expense based on revalued amount of 4,20,000. And number one, I'm giving you additional information. Some impairment indicator that shows that the recoverable amount, I'm giving you direct the recoverable amount calculated higher of value in use and the carrying amount less all these things. Recoverable amount that is 3,20,000. So now starting the workout, the machine carrying amount opening on the revalued basis, that is 4,20,000. And by end of reporting, we have calculated the depreciation expense, and that was 420 divided by 420 divided by 7, because the remaining time period is 7 years. That is 420,000 divided by, at that point, 2017, that is 15, 16 and 17. Divided by 7, 420 divided by 7, that is 60,000 per year. So that is 60,000. So this is carrying amount before impairment, yes? And that is 420 minus 60. That is the value of 3,60,000. And now showing some impairment indicator. Now showing some impairment indicator. And the recoverable amount, I'm changing from 320. That is the new recoverable amount for impairment. One moment, please. Two lakh 70,000. Putting the figure 2,70,000. So the impairment loss 360 minus 270, that's equals to 90,000. That's equals to 90,000. Now the important point is that we are going to work out for the impairment loss. An important point is that allocate this impairment loss in a manner that this assets already have some revaluation reserve of 70,000. So impairment loss is allocated according to the revaluation reserve, and that is 70,000, and to the income statement to the 20,000. That's 90,000. With the transaction, with that particular transaction, non-current asset machine value is credited with respect to depreciation expense, that is the 60,000, and then revaluation reserve, that is 70,000, and then income statement as impairment loss, that means 90 plus 60, that's equals to 1,50,000. So that's the difference of 420 and 270. That is 150. Income statement, that is depreciation expense. $60,000. Impairment loss, that is 20,000. Total amount 80,000. Statement of financial position, that is property, plant, equipment in the non-current asset, and that's equals to 270,000. This is what I'm working for the basic F7 aspect. This is what all F7 aspects. Number one. So now the revaluation reserve become nil. And yes, subsequently, the asset will be depreciated on this basis over remaining years. That is, we purchased the asset on 15, 16, 17 and 18 has gone, and remaining is 6 years. Depreciate over 6 years. With the amount, this one is the amount, 270,000. 270 over 6, that is 45,000 per year. Now, the aspect of, for example, do it in a complete manner. 2019, nothing happened, either reversal, either revaluation. Smooth year. Machine, sorry, building, that's a value 270,000. Depreciation expense 270 over 6, that is 45,000. And the carrying amount 270,000 divided by 6, that's 45,000 minus 270,000, that is 225,000. Income statement, depreciation expense 45,000, and statement of financial position, the property, plant and equipment, the property, plant, equipment building value, that is 225,000. That's moving on, huh? Now the spec is about 2020. 2020 reporting year, and showing some reversal of impairment. Because after 2018, the management have to review the position of the building. And one thing clarify, no impairment reversal at that year. No impairment reversal at that year. But reversal of impairment here, the revised recoverable amount of the building shooted, that is higher of fair value less cost to sell or value in use, and now become 440,000. Sorry, 450,000. It's now become 450,000. Now 2 points here relevant. Two important points relevant here for the working of reversal of impairment. First of all, we have to work out carrying amount of building without impairment. Sorry, without impairment reversal. That's very simple. Building value opening, that is 225,000. And the depreciation expense we have to work out on that basis. It's very simple, same straight line, that is 45,000. That is 45,000, simple. 225 minus 45, that is 180. Carrying amount without impairment reversal. Without impairment reversal. Now, what accounting standard says, you have to calculate a value of building as not had impaired before. As the asset had never ever impaired before. As the asset had never impaired before. So actually, the game of impairment arises after the revaluation of the machine. From the original aspect, the asset has a value with the cost of 500 in 2017, and we have done the depreciation on that basis and then depreciate. But 2018 asset now become revalued with the value of sorry, we purchased the machine at 2015 and we were depreciating 15, 16 at the cost basis of the 500,000. Okay, but in 17 the asset value now become increased, that's become to 420, and now we depreciated on that basis, that's 70,000 per year. And now 2018 the asset become impaired. So if we want to calculate the asset had never impaired before, so work out that basis. Revalued amount at 2017. Revalued amount at 2017. Sorry, 2018. I'm sorry. That is 2000. Sorry. Take my words back. That's a 2017 amount. To 4,70,000. And then depreciate on that basis, because 2017 has ended with the value of 4,20,000, then 18, and then 19. 18, 19, and 20. 4,20,000 minus depreciation expense for 3 years. 4,20,000 divided by remaining years. Remaining years after 2017, that is 7 years. 60,000 per year. Into 3 years. 420,000 divided by 70 into 3, that is 1,80,000. Number one. So 4,20,000 minus 1,80,000, that's the asset value should be 2,40,000. Or or another important point, if we start the working from the beginning, if we start the working from the beginning, so on the basis of cost, the machine value, we purchase the machine at 1st January 2015. At 1st January 2015. That is the 500,000. Purchase the machine at and we depreciate 15, 16, 17. 3 years. And calculate the book value 3,50,000 and revalued amount and this is 31st December 2017 and revalued amount 31st December 17, that is 4,20,000, and put the revaluation reserve with the value of 70,000. That's, we have done it already. Revaluation reserve 70,000. And now depreciate, if asset not impaired before, 18, 19 and 20. Yes, 18, 19 and so 420,000 divided by 7 into 3, that equals to 1,80,000. 420 minus 180, that's equals to 2,40,000. So either work out with this revalued or with this cost model. Same points based on two workings. That's 2,40,000. So this 2,40,000 is the value as the asset had not impaired before. Like this. Value of building as not had impaired before. As the asset had not impaired before. So that's value is amount with respect to 2,40,000. But another important point is that this is what the overall working with respect to the revaluation amount. Yes. And this is what particular examiner, particular point that's normally do the mistake. If we book the value of this 2,40,000, actually we are putting one mistake. And what mistake? This amount includes the aspect of the revaluation. If we put this amount to 40,000 here, then actually we are ignoring the amount of the revaluation, or we cannot reverse the value of the revaluation. Rather than we simply put the working in a manner that the machine cost first January 2015 is 500,000, and we calculate the accumulated depreciation for straight 6 years, and we put the matter upon cost basis. Cost basis, that is 500,000 divided by 10 into 6. That's so simple. 300,000. 500,000 minus 300,000, that's remaining part is 200,000. That's the carrying amount of building that had not impaired before, and this is without revaluation, and this is what the without revaluation, and this figure is more sense with this basis. What is the clear difference with this 200,000 cost based working? What is the difference between this cost based working and this revaluation based working? Of course, the difference is the revaluation. So candidates, actually this cost based working and this revaluation based working, it's a clear difference. So what we will say that either the cost based working or the revaluation working. Can you please reply me on the WhatsApp basis? Sorry, on WhatsApp. What working for the revaluation make more sense? Value of building as had not impaired before. Can you please reply me on the WhatsApp? Anyone else? Please with me. Be with me. Yes, please be participative. More answers required from your. Yes, Hassan wants to say something. Yes, very good. It's all about the cost based working. It's all about the cost based working. So actually we are here to discuss that whenever we are making a reversal of impairment concept, reversal of impairment, we have to consider the working of value of asset that had not impaired before rather than new realizable amount or new recoverable amount. So actually we are here to discuss that about the reversal of impairment, how much maximum the reversal of impairment exists here, how much maximum the reversal of impairment exists here. We will not consider the new recoverable amount as a reversal of impairment. Instead of the calculation, we will calculate as the asset had not impaired before. As the asset had not impaired before. And of course, the value is based on this cost basis rather than this revalued amount basis. So what we will do that, value of building as not had impaired before on cost basis, that is 200,000, and we will work out the reversal of impairment with the value 20,000. And what we were discussing that if we are going to reverse the impairment aspect, number one, what will be the transaction? The transaction is that building value will be increased and the credit should not be the income statement to the extent that how much revaluation reserve was used. The revaluation reserve was used till the value of 70,000. So till the value of 70,000, we will only use revaluation reserve. And that is what the concept discussed in this paragraph. Number one, 4.22. However, the carrying amount of asset is not increased above the lower of recoverable amount if determinable, and the depreciated carrying amount had not impairment loss originally be recognized. Means, yes, number one, our new recoverable amount is 450,000. Listen carefully, last point. This is what about reversal of impairment. Our carrying amount without reversal of impairment, that's we calculate 1,80,000. That's 1,80,000. Listen carefully. Now we have to up the amount because it's now time to reversal of impairment. So either relevant is new recoverable amount, or the carrying amount without impairment on cost basis. Accounting standard says that lower of this. Lower of recoverable amount and depreciated carrying amount, no impairment loss originally recognized. So we calculate this amount adds 1 lakh. Sorry. We calculate this amount on the cost basis is 200,000. And on recoverable amount that is 4,50,000. That's given. So we pick lower of this one, 200,000. And we will say that reversal of impairment, that is 20,000. But important point is that this 20,000 will be adjusted on the basis of revaluation reserve. This 20,000 will be adjusted according to revaluation reserve. Because originally we adjust the revaluation reserve, now reversal to the extent of revaluation reserve till the 70,000. Any extra amount, if in that case extra amount will be adjusted to the income statement. Yes, now the important point is that what is the extract? It's simple. Income statement, we have charged the depreciation expense, that is 45,000 because it's year end. A statement of financial position, non-current asset value building value, it's now become 200,000. Non-current asset and equity revaluation reserve, it's now become 20,000. That is all. That is all. So that is the concept of the reversal of revaluation aspect. Okay. Now move on. The last aspect, and it's in this handout, it's something about the consolidation, but we will discuss later about the consolidation aspect of the impairment once we will start the consolidation, and it's very soon. I know that today's night is about your result, and then the dynamics of the classes after result will be changed. I will give you a plan accordingly. So this one is done. Candidates, I have shared you one more document here before this, during the class, and this one is a document. One moment please. Candidates, this one is a document also mentioning or representing on the spec. Yes. Yes, don't worry, I'm going to end the class. But This one is very important, huh? It's a March June 17 exam question. It's a March June 17 exam question. This is also your assignment. Uh, this is what the spec. There is some problem related to this document about the rotations. So don't worry. It's your assignment. I will share you once more time of the document because its positioning is not clear. So you just read the question and solve it accordingly. And do remember you have to submit this assignment by Tuesday. Do remember one thing. This is what the requirement. Advise the directors of Kento how the above transactions should be dealt within its financial statement with the reference to the relevant IFRS. So you have to attempt the question in this manner. Listen here. Very important. Now start the assignment accordingly. Huh? You have to consider one thing. Two assignments here. One more is this one. This one. Orderless. Orderless. Do your assignment with exam pattern. What exam format? What exam format? IAS. Sorry. That is assembling. Assembling rule. We have already discussed this point. Two steps. First step, give reference of IFRS or IAS. Then plus second step, connect with case. So now start your assignment with this behavior. You have two assignments. You have to write the assignment and submit to me. I will comment accordingly. It's better to share on the group rather than private window. So it's better, it's easier for me to comment on it. And if you submit the assignment on group, that's also the alarming and the and indicating to others that yes, his assignments working is doing on. So that is what all over about the IAS 36. I have done it, and with respect to the IAS 36, thank you very much. Rest we will discuss on the assignment.